In today's show, Bitcoin is pumping, but could this be a weekend bull trap? Traders remain cautious as the Bitcoin price rebounds to $18,000. I'll be breaking this down for you in today's show. Also, breaking news, Guggenheim Partners prepare to invest $500 million into the king of all crypto. That's right, the $275 billion company just filed an SEC amendment to allocate over $500 million from the Macro Opportunities Fund into the Grayscale Bitcoin Trust. As John Rice points out right here, from 2016 to 2019, everyone was screaming, the institutions are coming. Then this year in 2020, the institutions are finally here. And next year, everyone's going to be like, damn it, the institutions bought all of the Bitcoin. We'll be breaking this down for you in today's show. Also, Max Keiser just tweeted, just to be clear, the risk of buying Bitcoin today has never been lower, and the upside is still huge, like 80x. This is why institutions are pouring in now. The risk has never been lower, and with Bitcoin currently trading just above $18,000, to 80x from here would put the Bitcoin price at about $1.4 million. And as Bitcoin Tina points out, if you don't understand how fast Bitcoin can be repriced, you don't understand how markets work. Tesla went from the $150 range to $450 range from the end of May to the middle of September. Bitcoin could reprice from the $20,000 range to $75,000 range between now and February. And Max Keiser responded to that. This is true. In fact, I expect it. The risk reward ratio for Bitcoin right now is you're risking 1 to make 100. That's right. You risk $1 to make 100. You risk $100 to make $10,000. That's a 1 to 100 risk scenario. So, as he says, the risk reward has actually never been better. I'll be breaking all this down for you in today's show. Also in today's episode, Paul Tudor Jones Bitcoin Fractal hints at a possible explosive Bitcoin rally. That's right. Based on the fractal, Bitcoin's in the early phase of a prolonged rally that could allow Bitcoin to experience exponential growth in the longer term. I'll be breaking this down for you in today's show. Also in today's episode, we'll be taking a look at the overall crypto market. As you can see, Bitcoin is surging as well as all the major altcoins, but where's the Bitcoin price likely to go from here? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium Crypto News Alerts every single day, including weekends just like this. And before I kick off today's show, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below the video in the description. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and let's kick it off by diving into today's top story of the day. Are we witnessing a weekend bull trap right now? Traders remain cautious as the Bitcoin price rebounds to $18,000. That's right, the Bitcoin price surged above $18,000 this morning, November 29th, reaching as high as $18,200 on Binance. However, traders are turning cautious despite Bitcoin's weekend rally. Bitcoin currently faces resistance at around $18,200, which is also the 10-day moving average on the daily chart. As Cointelegraph reported yesterday, some traders still anticipate Bitcoin to see another drop in the near term before the rally can continue. As we can see right here on your screen, that's the 4-hour chart. So why a bull trap for Bitcoin right now? A pseudonymous trader known as Crypto Capo predicted Bitcoin would see a relief rally to 18,000 as it dropped to the $16,000 region. Now on November 27th, when the price of Bitcoin was still hovering at around 16,700, the trader said he's ready to short 18,000. He added that he is now starting to hedge at 18,100 with plans to cut the hedge if the trend reverses. In the near term, the trader noted that the first confirmation of a correction would be a drop to 17,400. He shared the following right here on crypto Twitter: starting to build a hedge position. I don't want to sell some alt bags because the entry was very good, so hedge is a better option here. Invalidation for the hedge is clear. And then Nas responded, do you still think your $14,000 dump scenario is on the way, which would be clearly healthier for the market on the long run, or have you changed your mind and think we're testing the all-time high back, sir? And Il Capo of crypto responded, still likely, that's why I'm building the hedge, and I will add more on the confirmations or cut on the invalidations. And I would also point out, I highly don't recommend shorting Bitcoin, especially during a bull market. However, if Bitcoin continues to drop below 17,400 and eventually 16,800, the trader said a drop to the $14,000 region would become likely. But if Bitcoin rises above 18,400, that's the level to keep your eyes on right now, and consolidates at around 18,200, that would invalidate the bearish structure. Crypto Capo also noted that consolidation above 19,000 would completely invalidate the bearish setup. So there we have it. If Bitcoin can cross 19,000, then it's likely we cross that all-time high, reclaiming price discovery mode. I still feel confident we're to do this before the end of the year. Let me know if you agree or disagree in the comments right down below. Now, another pseudonymous trader known as Loma, who discussed the bullish structure for Bitcoin at 17,500, said he has cut half of his long position. Now, the trader emphasized that Bitcoin is nearing resistance as it looks to close its weekly and monthly candles, considering that the 18,200 to 18,400 area remains a resistance range. The trader shared the following: closed half of a long at $18,080, not looking to be too overexposed into resistance coming into the weekly and monthly closes. Lots of buying opportunities if we do break 18,400. There's not a lot of selling opportunities if we don't. And he also pointed out right here, I want to be bullish so bad. Please, Bitcoin just close above 17,400 or dump to 15,800. Also, Binance Futures alts that were performing well, market leaders, are looking kind of heavy. So there you have it. All right, now for the counter bullish scenario for Bitcoin. As technical analyst Crypto Burb said, Bitcoin typically faces two types of corrections: 15% and 30%. The analyst said that he expects a pullback to 14,000, but also noted that this is not guaranteed. He pinpointed various technical indicators, including Bitcoin being in oversold territory for the first time since the rally began. He shared the following on crypto Twitter: there are two major Bitcoin correction types, 15% and 30% declines. While anticipating the $14,000 region, I notice it's the first return to the mean and first oversold bullish momentum cross since the rally started. Very strong signal. Wouldn't mind all-time high before Christmas. Who's with me? All right, now for the bullish scenario for Bitcoin, which would still require Bitcoin reclaiming 18,400 and consolidating above it to confirm the new support levels. Popular trader Philby, shout out to Philby and his partner Philip Swift, who I had here on the show doing some technical analysis for us. He says that he's currently in cash as the market uncertainty is calling for increased risk management. He says in the event of a breakdown below 15,000 and a flip of previous support into resistance, that may present a straightforward short opportunity. He wrote on Sunday in his weekly newsletter. I also want to point out his partner Philip Swift suggests a $22,000 to $24,000 Bitcoin price before we witness any significant pullback once we can break out and reach that price discovery mode at $20,000. Now, before I break down our next story of the day, breaking news: Guggenheim Partners prepares to invest $500 million into the king of all crypto. Let's first take a look at the overall crypto market. We can see Bitcoin up almost 5% for the day, trading just above 17,900. Just a few minutes ago, we were at about 18,200 before I hit the record button. We have Ethereum up 6%, trading at about $547. XRP up 8.6%, trading just above 60 cents. We have Cardano up about 5%, trading above 16 cents. Miss Litecoin up about 6%, trading just above $74. So as you can see, all the altcoins are pumping alongside the king of all crypto, and it's a pretty bullish sign when you see everything in the crypto market starting to pump. Just saying, but could this be a fake out? Could this be a bull trap? What are your thoughts? Let me know in the comments right down below. Now for our next story of the day, let's break it down. An SEC filing on Friday indicates that the next Wall Street institution to take a public position in Bitcoin may also be amongst the largest yet. We're talking about a $275 billion financial services giant firm called Guggenheim Partners. The Guggenheim filing allows the Macro Opportunities Fund to purchase the Grayscale Bitcoin Trust, a publicly traded Bitcoin investment vehicle from Grayscale. Check this out. The Guggenheim Macro Opportunities Fund may seek investment exposure to Bitcoin indirectly through investing up to 10% of its net asset value into the Grayscale Bitcoin Trust, the filing reads. Now you do the math. That's a pretty substantial amount of money. According to independent ratings from Morningstar, the Guggenheim Macro Opportunities Fund currently has $5.3 billion in assets under management and sports a 4-star rating based on risk-adjusted returns out of the 270 non-traditional bond funds. Guggenheim describes the overall fund strategy for the institutional grade shares as a product of the investments team's highest conviction ideas. If the fund were to take the full 10% stake into the Grayscale Bitcoin Trust, it would be worth north of $500 million. That's right, over $500 million. The filing also notes a long list of potential investor risk associated with cryptocurrencies, which it refers to as digital assets designed to act as a medium of exchange. Risks include lack of crypto exchange regulation, Grayscale Bitcoin's trust historical significant premium to net asset value, and uncertainty regarding tax laws and regulations, among others. Now, this preparatory move by Guggenheim appears to be a part of a cascading series of investments, indicating increased acceptance of Bitcoin among major financial institutions. In August, business intelligence firm MicroStrategy purchased nearly 40,000 Bitcoin, leading to a parabolic move in share price. Likewise, financial services firm Square bought 50 million in Bitcoin back in October. Now, this rolling snowball of institutional interest may quickly become an avalanche, as noted by one prominent voice in crypto journalism, as pointed out right here by John Rice. From 2016 to 2019, everyone was shouting, the institutions are coming. And in 2020, this year, the institutions are finally here. And next year, everyone's going to be like, damn it, the institutions bought all the Bitcoin. Hey, it is what it is. Stack those sats now while you can. BTFD all day and HODL be thy name. All right, before I break down this bullish price prediction from Max Keiser, who suggests Bitcoin could 80x from here, putting the Bitcoin price at about $1.4 million, and we discuss Paul Tudor Jones' Bitcoin fractal hinting at a possible explosive Bitcoin rally. First, let's take a look at the overall crypto market cap, sitting at a whopping $544 billion, with $168 billion in volume in the past 24 hours, and Bitcoin dominance is currently 62.1% according to CoinMarketCap. Now, checking out the top gainers within the top 100, we have Horizon up 18%, trading just below $15. Numeraire up 15%, trading just above $36. Zilliqa up 13%, trading at 2.9 cents. Nexo up 10%, trading just below 28 cents. And Digibyte, go Digi, up about 8%, trading at 2.3 cents. Now checking out the biggest losers within the top 100, we have XLM, which has been on a tear, still up 83% for the week, but down 7% in the past 24 hours, trading at 19.4 cents. We have Neem down 5%, trading at 17.4 cents. ABBC coin down 4.5%, trading just below 22 cents. And Nano down 3.5%, trading at $1.18. Now, out of this list of the biggest gainers and losers, which altcoins are you watching right now and are you most bullish on? Drop me a comment right down below. Now, checking out the Binance margins, we can see the bears are in control but barely, leading with 51.1% shorts versus 48.9% longs. Are you currently bullish or bearish on the king of all crypto? Holla at your boy. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated an 89 in extreme greed. Yesterday was an 87. Last week a 94 in extreme greed. And FYI, 94 is about as high as I've ever seen it. And last month we've been a 74 in greed. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity, aka BTFD. Buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. And guess what? We've been in extreme greed. We witnessed a correction, and now we're pumping once again, like clockwork. All right, now let's break down these latest tweets from Max Keiser, which all began here with this tweet from Bitcoin Tina, who wrote, if you don't understand how fast Bitcoin can be repriced, you don't understand how markets work. Tesla went from the $150 range to $450 range from the end of May to the middle of September. Bitcoin could reprice from the $20,000 range to $75,000 range between now and February. Wouldn't that be pretty spectacular if Bitcoin did surge to $75,000 by February? I think that'd be fantastic, as my birthday is in February. That'd be the perfect gift, just saying. But Max Keiser responded to this. This is true. In fact, I expect it. The risk reward ratio for Bitcoin right now is you're risking 1 to make 100. That's right. You risk $1 to make 100. You risk $100 to make $10,000. That's a 1 to 100 risk scenario. So, as he says, the risk reward has actually never been better. And then he continues up with this. Just to be clear, the risk of buying Bitcoin today has never been lower, and the upside is still huge, like 80x. This is why institutions are pouring in now. The risk has never been lower. I think Max hits the nail on the head right here. Who wouldn't want to invest, let's say, $1,000 for a $100,000 potential return? That, my friend, is Bitcoin right now, according to Max Keiser. And checking out some of the responses to his tweets, we have Joachim Linneman, who wrote 80x in a year. Okay, but this will be more over the next 10 years if Bitcoin is to eat up all other currencies. And as the money-making, meditating monkey points out right here, what a name, all currencies and asset classes in general, Bitcoin is actually life. Touche. And checking out some more responses, we had Dan McArdle, who responded to Max. Arguably, the first half of 2012 was better, but your point still stands. And Max Kaiser responded, there was way more risk in 2012. The risk of buying Bitcoin today is at its lowest point ever. And I agree. I'd love to know your thoughts in the comments right down below. As the bigger the market cap is, the more stable the network. That's a fact. And he says the upside is still huge. I couldn't agree more. Bitcoin Tina responded, exactly. Investing is risk versus reward. Failing to remember both sides leads to unhappiness. And Dan McArdle responded, of course, but look at the 2012 price was $4. Existence of Bitcoin has been de-risked by the ecosystem still existing, growing after the 2011 bear market, and value probably was always the same, gunning for at least gold. Next major de-risk was 2016-ish, when many people started seeing Bitcoin as gold-like. And Bitcoin Tina responded to that, but no one serious would put as big a percentage of their money as a guy like Michael Saylor back then. Maybe if one had very little money. If you had $5 million in 2012, 2016, how much Bitcoin would you buy? 50,000, 100,000, 200,000? Doubtful, much more. Today, one could easily put in $500,000. Absolutely, or in this case, $500 million. All right, and before I break down our final story of the day, Paul Tudor Jones Bitcoin Fractal hints at a possible explosive Bitcoin rally. First, I want to remind you to smash that show more button right below the video in the description for a detailed analysis of what's going on in the market. This goes for all 600 plus videos right here on my YouTube channel. I also have some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Also, be sure to smash that subscribe button right below this video to receive daily crypto news alerts just like this. It also helps support the channel, and I greatly appreciate your support. You can also follow us on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes. You can also follow me on Twitter to receive daily crypto news alerts. My Twitter handle is cryptonewsyes. And for those of you active on Facebook, I do have a private crypto Facebook group entitled Crypto Alchemy. To join it, click this link, request to join, and I'll be sure to plug you in. And for those of you active on Telegram, I do have a private crypto Telegram chat. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. All right, now let's break down our final story of the day. Based on the fractal, Bitcoin is in the early phase of a prolonged rally that could allow Bitcoin to experience exponential growth in the longer term. As you can see right here on your screen, gold price versus the Bitcoin price. This is coming from Bloomberg. Now check it out. Bitcoin may be on the same trajectory as gold. That's right. There's two main reasons why Bitcoin could follow the macro trend gold saw from the 1970s. First, Bitcoin has a fixed supply that cannot expand, which makes it an attractive hedge against inflation. You can say that again. Second, Bitcoin has the same qualities of a safe haven asset that gold has. In fact, Bitcoin is a better version of gold than gold itself. In August 2020, the Winklevoss twins, billionaire Bitcoin investors behind the U.S. crypto exchange, Gemini, laid out a bull case for why the Bitcoin price could rally to $500,000 per BTC. In the thesis, they identified the qualities of Bitcoin that make it a viable safe haven asset. The Winklevoss twins specifically emphasized that Bitcoin is not subject to any potential supply shocks. Unlike gold, they wrote the following: supply. Bitcoin is not just a scarce commodity, it's the only known commodity in the universe that has a deterministic and fixed supply. As a result, Bitcoin is not subject to any of the potential positive supply shocks that gold, or any commodity for that matter, may face in the future. That's a fact. If you think about it, Bitcoin, there's only 21 million that could ever be in circulation. There's probably millions that are lost forever. Whereas with gold, what's the supply cap? Nobody knows. It's a mystery, and there's massive manipulation always going on between banks manipulating the gold prices, and at the end of the day, you just can't trust it. The hardest form of sound money in existence on the universe, as the Winklevoss points out, is Bitcoin, right? It's true scarcity built right into its ecosystem. Due to the characteristics of Bitcoin, investors continuously make the argument that Bitcoin makes a better safe haven asset than gold. No comparison whatsoever. The comparison between Bitcoin and gold is what leads many to believe that Bitcoin is on a trajectory for a long-term exponential growth. I couldn't agree more. Su Zhu, the CEO of Three Arrows Capital, one of the largest funds in the crypto space, shared the following on crypto Twitter. Any continued dump in Bitcoin would be extremely bullish, as it would reveal we are following the gold fractal from the 1970s as per below by Paul Tudor Jones, the legendary macro investor who successfully used fractals to predict the 1980 stock market supercycle. And that's right. And earlier this year, Paul Tudor Jones came out endorsing Bitcoin, saying he invested 2% of his overall portfolio into the king of all crypto. And as you can see right here, this is brought to you from Paul Tudor Jones via Zero Hedge. You can see gold price in comparison to the Bitcoin price. I do feel Bitcoin will continue to eat up that gold market cap like a black hole. That's right. The gold market cap currently sitting at above 9 trillion, and with Bitcoin sitting at about 350 billion, there's going to be a flippening. And once that flippening occurs, I expect nothing less than a $500,000 Bitcoin price, as the Winklevoss twins point out. Let me know your thoughts in the comments right down below. Tyler Winklevoss also noted that the anonymity of Bitcoin's creator is a major positive factor for the digital asset. He said that Bitcoin has evolved into a $330 billion asset, and yet Satoshi Nakamoto, the creator behind it, remains anonymous. That's right. This only legitimizes and further strengthens the perception of Bitcoin as a proper store of value. He shared the following on crypto Twitter. The fact we don't know who Satoshi is yet, Bitcoin's market cap is $330 billion, is a testament to the fact that Bitcoin speaks for itself. Touché. All right, now for a quick recap of what I covered with you right here in today's show. Is this a weekend bull trap we're experiencing? Traders remain cautious as the Bitcoin price rebounds to $18,000. Also breaking news, Guggenheim Partners prepared to invest over $500 million into the king of all crypto. As John Rice points out, from 2016 to 2019, everyone was shouting, the institutions are coming. Then this year in 2020, the institutions are finally here. And next year, we're going to be like, damn it, the institutions bought all of the Bitcoin. That's why we need to start stacking those sats right now. Also in today's show, as I pointed out from Max Kaiser, just to be clear, the risk of buying Bitcoin today has never been lower, and the upside is still huge, like 80x. This is why institutions are pouring in now. The risk has never been lower. And that's right, with Bitcoin 80xing from 18,000, the current price, that would put the Bitcoin price at about $1.4 million. Also in today's show, as I pointed out, Paul Tudor Jones Bitcoin fractal hints at a possible explosive Bitcoin rally. So where do you feel the Bitcoin price is likely to go from here? As you can see, we're back above that critical 18,000 resistance. I'd love to see Bitcoin break out above 18,400. I feel if we can do that and flip it into a support, we'll continue marching towards that $20,000 all-time high, reclaiming that price discovery mode. Then from there, there's no telling how high we can climb. So where do you feel the Bitcoin price is likely to go next? Drop me a comment right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button, that's right, and turn on all notifications to receive daily premium crypto news alerts every single day, including weekends just like this. And real quick before I go, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below the video in the description. You'll be glad you did, and I look forward to seeing you on tomorrow's episode. Peace.